If we look at the UK market, for example, and at Muslim minority countries generally, you'll find that there's a lot of Muslims who are either not investing in the Sharia compliant way at all, a very large proportion of them, or they're in some type of hybrid solution, so partly investing in Sharia compliant products and partly not. And then there are those which are just investing in Sharia compliant products of various kinds. When it comes to the Sharia screening criteria, remember, we're setting rules which certain companies need to meet, or criteria that certain companies need to meet to be deemed to be Sharia compliant.
And then they say, no, it's not Sharia compliant because that company has activities in countries which have been accused of and certified as doing genocide. Therefore, that stock should not be Sharia compliant. Assalamu alaikum, everyone. It's Ahmed from Nisba, and I'm joined by
Adil from Nisba.
And today we have one of the big fish from HSBC, Sefian. If you wouldn't mind introducing yourself.
Absolutely. It's a pleasure to be here, gents. Thank you very much for the invite. So I work at HSBC Asset Management. I've been at the firm for about 18-ish years, held different roles within HSBC. So I started off on the trading side, was in global banking and markets for about 10 years as a cross-asset trader, then as a fixed income market maker. I then moved over to HSBC Global Research, where I spent a few years as an asset allocation strategist, doing multi-asset type work, and then moved into asset management in 2020 to head the investment specialist team on the passive side.
Judging by your LinkedIn, it looks like it's the only job you've ever had.
For all intents and purposes, yeah, because I came straight from university where I was doing a PhD in math finance to HSBC Asset Management. So I more or less joined as I was finishing up my PhD.
And interestingly enough, when you joined, I think it was around 2007, and you were in like the macro team, you were there for the financial crash.
Absolutely. So great timing, of course. I joined just as things were turning south, let's word it that way. So global financial crisis was literally on the eve of the global financial crisis that I joined the firm and joined the trading desk. So it was a really interesting few years. The first few years, I kind of had to literally feel my way through one of the most significant global crises of the past 100 years. So very interesting period.
Sefian, have you ever watched one of our old podcasts?
I have looked at your website, but I haven't watched one of your podcasts all the way through.
Do you know what feedback we get? We've got feedback that we go a bit easy on our guests.
Okay.
And we let them have a nice time and say what they want to say. So the idea is today to go a bit deeper because we want to talk about the HSBC Sharia compliant Islamic funds. We've got questions that we've got from our audience that have all sorts of questions that they're interested in knowing with regards to the different Islamic funds. But we're going to start off easy.
Okay.
And then we're gonna start to get more and more technical and more difficult as we get through.
No problem.
So can you just introduce the different Islamic funds that HSBC has?
Absolutely. So we've very proudly built a suite of Sharia compliant investment funds over the past few years. We've actually had a flagship fund which has been on the shelf for 20 odd years, 20 plus years, our Global Islamic Equity Index Fund, and that's a passive global equity exposure. So it tracks a global equity benchmark, which is Sharia compliant. But we've, over the past 2 to 3 years, built a whole suite, a kind of asset allocators toolkit, as we like to think of it, which is comprised of what we consider to be the minimum number of tools needed for any Sharia compliant investor that wants to build multi-asset portfolios which are completely Sharia compliant from front to back. So we launched a suite of country and regional equity ETFs, which are Sharia compliant. And we built an ESG layer into those because a lot of our clients in Europe were asking for us to have an ESG layer because they needed to tick the ESG box. We also brought to market a Sharia compliant listed real estate ETF to complement that. We have a passive Sukuk fund, which tracks FTSE IdealRatings investment grade Sukuk benchmark. So we have this kind of toolkit that we've created. And what we've done using that toolkit is we've built a multi-asset fund, a kind of 60-40 Sharia compliant balance fund equivalent to kind of show people really how they can use the toolkit for building Sharia compliant investment funds with different risk return profiles.
Okay, so quite a lot to digest there. But you've got the HSBC Global Islamic Equity Index Fund that you've had for over a couple of
20 plus years, yeah.
Okay, so a couple of decades there, and then you've got a few ETFs. From what we've seen, World, Europe, EM,
Japan.
the REIT,
And the and then the Sukuk.
and the Sukuk.
Okay.
Correct.
So they're the 6 funds.
Yep.
Okay, great.
USA as well.
Oh,
Oh,
and
USA.
USA.
Yeah.
So one question that we got asked all the time is, oh, HSBC have 2 global funds. And we're like, no. One is global, one is world. But obviously, they're looking at similar things. From a structural point of view, one is an ETF, one is a normal fund. But what should investors generally be thinking about or looking when they're looking at these 2 funds and they're thinking, oh, these are both global funds. What's the difference between them? Not which one should I invest in, but what's really the difference between them for people?
Got it. Yeah, no, very good question, actually. And you'd be unsurprised to hear we get that a lot from investors. There's a few reasons why we have 2 kind of global exposures on the shelf. Part of it is legacy. So the Global Islamic Equity Index Fund, the flagship, that's been around for 20 odd years. That we brought to market quite a long time ago on the basis of demands at the time. So at the time, investors were interested in us bringing to market a product or products which tracked benchmarks within the Dow Jones Islamic family of indices. More recently, a lot of our investors have been telling us, look, we're benchmarked against MSCI indices, so it would be very useful for us to have exposures which track MSCI benchmarks. So you have this legacy thing in that we launched the Global Islamic Equity Index Fund, which, as you say, is an index fund, so not an ETF, and it's in a Luxembourg domiciled CCAV wrapper, and we can talk about that a little bit more if need be. And then we have the ETFs, which are Irish domiciled ETFs, and the distinction between the 2, really, apart from the different underlying benchmark that they each respectively track, is the nature of the product wrapper. So ETFs tend to be used by investors that are perhaps a little more nimble, may have, in some instances, a shorter investment horizon, whereas index funds, so the old traditional index mutual funds, tend to be used by investors that typically have a much longer investment horizon. So we brought ETFs to market because they were modern, in demand, if you like, product wrappers that our clients were telling us that they wanted. And, the audience which uses the ETFs isn't necessarily the same audience which looks at and uses the CCAV. So we wanted to make sure that the ETF suite of exposures was complete. It had a world in it, USA, Europe, Japan, EM as discussed, and that we feel is quite a complete, if you like, suite of country and regional exposures which you can use to build the equity sleeve of a multi-asset construct. So the CCAV Global Islamic Equity Index Fund structure is there for people that want to use it. They can invest in it. But different product wrapper and also different benchmark as well. It's a benchmark which is a little more concentrated, I'd say. It leans a little more towards the US and to tech exposure than the MSCI benchmark, which is perhaps a little less US and tech heavy.
So I think if we just try and break it down it's funny because we said let's do beginners first, but we forgot about it and went straight for it. So just in case people don't know, obviously you can invest into stocks and shares. And as opposed to going and buying individual stocks and shares, you can buy a fund which basically groups them up. And funny enough, we had a conversation with someone today, and she was saying that she explains it to her female friends, by saying it's like a palette of eyeshadow. Rather than buy one eyeshadow at a time, you could buy a palette of all these different colors, and it saves you the hassle of going and buying the different flavors. So that's all a fund is. I think where there's a lot of confusion is what role does HSBC play and what role does the indices provider play?
Good question. So we track benchmarks. So these are all passive funds. So as you rightly say, right, every single one of these funds, it tracks an underlying benchmark. The benchmark itself is comprised of a portfolio of stocks, all of which are Shariah compliant according to the index provider's rules and according to our Shariah board, which kind of oversee our Islamic range. So every single fund gives you exposure to an asset class or a sub-asset class, and that asset class or sub-asset class in its entirety. So a US equity fund will give you exposure to the US equity market in the broadest possible terms. Same with the European fund, etc. The underlying benchmarks, the rules around creation of those benchmarks, so how they select stocks, whether it's how they select stocks on the basis of whether they should fit into a US benchmark or a European benchmark or an EM benchmark, or the rules around Shariah compliance. Should this stock be included within this benchmark because it's Shariah compliant or not? That rule set is created by the index provider, and the index provider is responsible for creating the individual indices that our funds track using the set of rules. So we simply track the underlying benchmarks themselves. Now, with some benchmarks, the classics that everybody will have heard of, FTSE 100, S&P 500, etc., these are created by benchmark providers, and passive funds typically will just replicate those. So they'll just invest in the underlying stocks to try and give the investor the return of that benchmark over time. But sometimes asset managers, they work with index providers to create indices. So a good example of that is our MSCI Islamic indices, which have the ESG screening in them that I mentioned. So we worked with MSCI to think about the right set of environmental screens which complemented the Shariah screening well. Because the Shariah screening, it's built around a certain set of Islamic principles. And what you tend to find is that the screening leans a little more in the direction of the S pillar. If you want to, speak the ESG language, environmental, social, governance, it tends to lean a little bit more towards the social and governance side of things. So we wanted to augment that with some environmental screens. So you had, the Shariah screening. So you had a Shariah compliant index, which our fund tracked, but you also had some environmental screens incorporated within that, so that investors in Europe that, as mentioned previously, are quite big on ESG investing, they could say, look, we're ticking both boxes.
So HSBC constructs its portfolios after looking at the benchmarks that MSCI has created, but you help create them. So it's not completely independent.
Yes.
What happens if there's a slight disagreement between your Shariah board and, let's say, MSCI's Shariah board in terms of what's Shariah compliant? Who wins?
Yeah, our board wins because at the end of the day, we are the customer of the index provider. So it's our job to pick, an index which we feel is suitable for our client base, i.e. for our fund to track, because our client base invest in our fund. So what we would want to do is, let's say we wanted to create a fund which gave exposure to US equities. You have a number of different index providers which offer Shariah compliant indices which give exposure to US equities. Let's say we went to index provider A, and the rules or the Shariah screening methodology, if our Shariah board at HSBC didn't feel that the screening was robust enough or wasn't Shariah compliant in its entirety, then we would either ask for it to be changed. If there wasn't scope to change the screening methodology, we'd go to another index provider which could offer us US equity market exposure, which we felt was completely Shariah compliant according to our Shariah board.
So it's quite a customer focused thing, because there are quite a few different index providers. We've
Absolutely.
got Dow Jones, we've got S&P, we've got MSCI, we've got FTSE. Now, interestingly enough, some other major Islamic funds, they also use MSCI, and the holdings within those funds, which are done by BlackRock and HSBC, they're very similar. But your funds differ ever so slightly in their underlying holdings, and I guess that's the ESG part.
Correct. Exactly. So, as I say, that's the ESG screening piece built into that suite of indices, the Shariah compliant MSCI products at the country and regional equity ETFs I mentioned previously. The ESG screening, which is built into those, is ours. We co-created that with the index provider, that piece of the screening methodology. And so no other asset manager or fund manufacturer will have funds which track those exact underlying benchmarks.
So if there is a particular company or an underlying holding that you guys have deemed that you don't like, do you have to give a reason as to why you want to kick them out?
So remember, the indices are rules based, right? So you set the rules first, and the rules will determine which stocks make it into the index and which don't. And those rules you don't adjust. Once you've set them and everybody's in agreement that that's what the set of rules should look like, they then run mechanically. So we're not picking stocks actively. So yes, we will have, as a result of the screening methodology in the funds in the indices that we've co-created with MSCI. As mentioned, there may be some differences compared to other Islamic benchmarks. And we do receive questions. So why is this stock included in this Islamic benchmark but not in yours, etc.? So we'll have to identify exactly which part of the screening process removes that stock and why, and provide a rationale to our investors.
But are not some of the screening criteria, are they not qualitative and therefore, in a way, subjective instead of quantitative, or are they all?
It depends on the nature of the underlying index construct. And how the screening is being applied. So, with it, for example, with the MSCI benchmarks, the underlying, if we take the Shariah screening piece, you have, and this is, by the way, this is quite common if you look at any Islamic equity index of any kind, so any Shariah compliant equity benchmark, you'll see very similar screening process applied. There's typically two layers of quantitative screening. The first is a set of business accounting screens, which look at the revenue profile of the company, how it's generating its revenue, what products and services is it selling into markets in different jurisdictions. And you'll have a second set of screens, which are often built around accounting screens built around financial ratios of various kinds. And the idea behind those is to identify how leveraged the company is. So how dependent is it on debt for its day-to-day working capital needs, etc. So both of those sets of screens are quantitative in nature, typically. So when it comes to passive investment constructs, indices, and by the way, this holds for almost all index passive constructs which track underlying indices of various kinds, you'll find that in almost all instances, the underlying index methodologies are formulaic, typically quantitative in nature. There may be some qualitative discretionary judgment when it comes to, you have index committees and so forth, which may express a view on whether a specific stock makes the cut into an index. But for the most part, they're formulaic and quantitative. And with respect to the Shariah screening piece within these underlying benchmarks, it's quantitative and formulaic in that sense. But then you have other types of benchmarks in the Shariah space. For example, the Sukuk passive fund that we have, which I mentioned previously, which tracks the FTSE IdealRatings investment grade Sukuk index. So FTSE, the underlying benchmark provider, partner with a third-party Shariah screening provider, IdealRatings, and IdealRatings provide the Shariah screening methodology for the Sukuk universe, which is potentially eligible for that particular underlying index. So they provide a screening methodology, and FTSE will apply that screening methodology to the starting universe, the underlying universe, the investment grade Sukuk space, and they'll use that methodology to determine whether a specific Sukuk structure is Shariah compliant or not. Now, there may be some quantitative and some qualitative aspects to that criteria. I think they have around 150 different standards which they apply within the IdealRatings, the overall IdealRatings screening methodology, their rule book. Some qualitative, some quantitative. So it depends on the underlying index construct. For the most part, you tend to find it's formulaic and quantitative, But in some instances, there is some qualitative discretion associated with building the rules which are applied. So not the selection of the stocks per se, but the rules which are applied.
Because one question that we get asked over and over again is who are choosing these stocks within these funds? Are they really Sharia compliant? And then sometimes answers are given that, oh, HSBC isn't choosing the stocks. It's MSCI that chooses the stocks based on some quantitative criteria. And the most common thing that we get when we're speaking to an audience and we're saying, everyone, guess if this stock is Sharia compliant or not. And then they'll say, no, it's not Sharia compliant because that company has activities in countries which have been accused of and certified as doing genocide. Therefore, that stock should not be Sharia compliant. And then we're like, whoa, that's not how Sharia compliant is done. Though it may be something worth considering, that's not currently how you determine a stock is Sharia compliant or not. Is that not something that HSBC consider as well?
Yeah, it's a very good point, actually. And we've had many similar questions. And I mean, to go back to the first statement you made about stock selection, if we take a simple benchmark, to go back to the simple benchmark example, take FTSE 100, the underlying rules, so the rules around that benchmark, the creation and maintenance of that benchmark, they've been set. They may be reviewed periodically, but they've been set, and they kind of run mechanically, meaning by that stocks make it into or out of the index at periodic review points, depending on whether they meet the criteria or not. So there are underlying rules. It's that is the case with almost all passive products which track underlying benchmarks. Those benchmarks are created using a set of rules. Same for all of the Islamic benchmarks which our funds track. The key is when it comes to the Sharia screening criteria, remember, we're setting rules which certain companies need to meet, or criteria that certain companies need to meet to be deemed to be Sharia compliant, right? And if they meet that set of criteria, which, as mentioned previously, is typically speaking quantitative in nature, they'll make it into the underlying index. So there's no discretion there. We don't sit there and decide on the basis of criteria outside of that formulaic screening whether a company should make it in or not. And not everyone will agree with that. I mean, we make the rules, we're very transparent. We make it very clear what the rules are, the Sharia screening criteria and rules, and the underlying index methodology and rules. It's all out there in the public domain for everyone to see. And we fully accept that some people may look at that screening methodology and the underlying criteria and say, this isn't completely Sharia compliant, doesn't lead to every single company that makes it into the underlying index. It doesn't mean that every single company is Sharia compliant. And so therefore they have a different opinion. We totally accept that, and we totally acknowledge that. And, they're then free to find other substitutes, other funds which they feel are completely Sharia compliant.
So is it worth noting then, because the rules have already been predetermined, they can never be amended or adjusted to account for, like, obviously what is happening now, where clearly, these would not be deemed ethical by many of the investors, the companies that perhaps go in there. So you can never add to the rule base, basically, where I think you said there's like 100 different standards they have to fulfill. You can't just add another one in. You absolutely can change the rules. And what you tend to find is that when it comes to, on the active management side, the rules are perhaps a little more fluid. But what you tend to find on the passive side is that you have this commonly agreed upon criteria amongst Sharia boards in different jurisdictions. So what is the minimum that you should be doing when screening companies to ensure that a company is Sharia compliant? And what rules can you create which will stand the test of time in that respect and not change tomorrow as circumstances change? And I think there are certain criteria within the business activity screening that we would all agree will stand the test of time. So, alcohol production, gambling, involvement in those areas.
and also with respect to the debt piece, companies which are heavily indebted or leveraged. I think we would all agree that, over time, we wouldn't change our mind about whether we should be investing in these types of companies or not. So the screening criteria have been built in such a way that they stand the test of time and are built around common principles where there's no disagreement, typically speaking, amongst scholars.
Wow.
So one thing, it seems to me that HSBC could amend the rules to be more aligned with the thinking of some Muslims, or perhaps even the majority of Muslims. But you're saying that maybe we don't do that now because those rules won't stand the test of time and they won't be universal.
What I'm saying is that we have a set of rules that the vast majority of our investors are happy with, and so therefore we're keeping them as they are. And as mentioned previously, that doesn't mean that everybody agrees with them. That doesn't mean that everybody's happy with the screening criteria. We totally understand that and accept that. But as it stands, we have the screening criteria which our Shariah scholars have signed off on, and our investors in the main are happy with. So we're sticking with that.
To be honest, I do wonder if the majority of investors are happy with. I think the majority of investors, from what we've seen anyway, they accept it because of the lack of other available options. For example, the idea of Muslims using a company which is, as most financial firms are, inherently un-Islamic because of its main business activity, as a vehicle to invest in a Sharia compliant way. What would you say to that argument that, HSBC, but why are we even giving our money to them?
Do you mean that people are investing in options simply because there's nothing else which is suitable, which comes close to their principles? I mean, yes, absolutely. So if we look at the UK market, for example, and Muslim minority countries generally, you'll find that there's a lot of Muslims who are either not investing in the Sharia compliant way at all, a very large proportion of them, or they're in some type of hybrid solution, so partly investing in Sharia compliant products and partly not. And then there are those which are just investing in Sharia compliant products of various kinds. So you have a whole range of investors that are, investing in different ways. As I say, in terms of our client base, as we understand it, is happy with the products that we've brought to market. They're providing access to markets which previously wasn't there, Sharia compliant access to markets which previously wasn't there. The screening criteria which are being applied, I think, will stand the test of time. Our Sharia board has signed off on it, and people accept that as being, a good starting point in terms of creating robust Sharia compliant investment products that they understand. A simple, transparent, easy to understand, and they don't feel will change in ad hoc ways over time. So that continuity and consistency is important to people.
Yeah, it's a really interesting one because obviously, like, we speak to the retail market quite often, and to be completely honest, the sentiment is the opposite. They very much want it to be much more ethically aligned. So it would be interesting to know as to why the Sharia scholars, even like internally or part of MSCI, whoever it may be, have not pushed for maybe some sort of change. It would be interesting to know kind of why they haven't taken that approach. And I understand there's a hugely subjective nature to some part of it, to come up with a rule base that can just work on a passive basis. And I think that really is perhaps where the difficulty comes in, and where maybe active investing is a whole different ballgame. And I think that's quite a nice little segue into HSBC has gone down the intentional route of passive investing. Any particular reason why you haven't gone into the active route at all with active funds?
Again, it came down to us speaking to our client base and asking them what was important to them. What did they feel they need in terms of vehicles that would give them access to markets? What was important to them in terms of cost, in terms of transparency, in terms of general access. And I think, as with the conventional market, passive investment products have been very popular because they're much cheaper than their active counterparts. Active investing has had a bit of a tough time over the past few years. So what we heard from our clients is that there would be a preference for, in the first instance, creating a suite of Sharia-compliant investment products, which gave access to different markets, which were affordable. So we went down the passive route for that reason, because we wanted, as I said at the beginning of the podcast, to create this Sharia-compliant investor toolkit, which was there for anyone to use that wanted to build Sharia-compliant multi-asset portfolios with different risk-return objectives.
I definitely agree. Like, the suite of products that HSBC has made it very easy for investors to get exposure to equities from around the world, and so much so that actually no other real party has come up with such an extensive suite. On the fee one though, so the fees obviously are roughly around 0.3%. So if you look at like a non-Sharia compliant fund, what would you say is the biggest reason as to why the Sharia compliant funds are so much more expensive, or would you say that they are expensive relative to a non-Sharia compliant fund?
Yeah, it's a good point, and it's one that comes up time and time again with clients, and I totally understand why. And yes, they are, Sharia compliant equivalents, if you like, of conventional exposures in the passive space and active space for that matter, often can be more expensive, as is the case with some sustainable investment exposures as well. Now, there's a number of different reasons for that. I mean, when it comes to managing Sharia compliant investment products, you have additional kind of layers of oversight which need to be in place. So the way you manage the portfolios is different. There are constraints there in terms of how you manage cash balances, the inability to use derivatives for efficient portfolio management purposes, the kind of compliance piece. You need extra layers of compliance, legal, and then of course you have the Sharia board, which oversees it, and there are costs associated with that Sharia oversight. So I think a lot of the costs, the additional costs, come through because of the extra infrastructure which is needed when managing Sharia compliant investment funds. But I think, look at the passive space over time. You've seen fees come down bit by bit. I'm sure as more Sharia compliant investment products come to the market, you're going to see fees mechanically evolve.
Well, yeah, even between, I guess, your global index fund and then the ETFs are significantly cheaper already. So there's been good progress in that space.
One thing that people might not know is that when they invest in the HSBC Islamic funds, the Sharia compliant ones, some of that money that they would have received if they weren't investing in an Islamic fund is actually being taken and given to charity.
Correct.
Why does that happen, and how does it work?
Good point. So it's actually one of the things we pride ourselves on, the fact that we have what's known as a dividend purification process in place across our entire Sharia franchise. And to speak in terms of principles and from a philosophical standpoint, our viewpoint at least is that a fund isn't completely Sharia compliant unless it has been purified. And let me explain what I mean by purification. So if you take, for example, one of our global exposures, let's say our MSCI World Islamic ETF, that ETF is investing in companies which have not necessarily been built with Sharia compliance in mind. They may have business models which derive revenue from non-permissible sources. We discussed some of those previously, but they may sit below the threshold, which means that they are removed or that they are deemed to be Sharia non-compliant, meaning by that they may have some small proportion of their overall revenue coming from non-permissible sources.
Like Tesla selling alcohol.
Right. So something like that, exactly. So what we try to do to offset the bad from that, because theoretically the fund is benefiting from that, right? We apply a charitable offset. So what we do is we work out on a company-by-company basis the proportion of revenue which comes from non-permissible sources, look at that within the context of the entire revenue profile of that particular company. And we use that ratio, if you like, as a guide to tell us how much of the dividend income that this company is going to pay into the fund over the course of the year, we should ring fence and pay away to charity. So that's what we do. We try to offset some of the bad with some good through the dividend purification process.
No, to be honest, it is a very, very handy service for an investor. And I think in case there's still some confusion, like when you invest into a single company, whether it's Tesla or Microsoft, whoever it might be, when they pay you a dividend, in case that you're not sure, you have to give away, let's say, 5% of that because that's the threshold. And imagine you're investing into 500 or 1,000 companies. That becomes a very burdensome task. So if the fund provider does it for you, obviously a huge headache has been removed.
Correct.
And where do you give this money?
So currently, the charity we work with is BBC Children in Need. We also, I mentioned that our flagship Global Islamic Equity Index Fund, actually, there are two product wrappers to get back into the technical stuff that fund exists in, one for the UK DC pension market and one for other investors. And actually, that particular fund works with two charities. It works with BBC Children in Need and Shelter in the UK.
Can Muslims pick their charity, or can investors pick their charity?
We toyed with the idea of that, but it's just too difficult for us to do in practice. That's why I think most other providers just leave it to end investors that would rather pick their charity to invest in their funds. And
could we do a global vote and pick a new charity?
Well, there are funds like by other providers who do passively managed funds who pay out income as opposed to reinvest the dividends. So in theory, if a Muslim did really want, or if an investor really did want to purify their own dividends and choose a charity, they can just invest in one of those income funds.
No, but I'm thinking, imagine you did it on a global scale and you poured all that money into a charity that perhaps a lot of people were behind. It'd have a lot of power rather than individuals choosing. It must
economies
be
of scale.
Yeah,
Well, you can say that about all charity work because there's so many small charities. You say all small charities should be like, probably right.
Yeah. Just group them up.
Sefian, you touched on the point earlier about picking stocks and how it's determined. The other big concern that we get about the Sharia compliant funds and HSBC is that HSBC is inherently itself not an Islamic institution. Do you think that's important, or do you think the fact that they're creating Islamic funds is enough and it doesn't really matter who's issuing them?
Yeah, I'm very much of the latter school of thought, meaning by that look, the way I think about things is very simple. At the end of the day, we're trying to help people. Yes, we benefit from that because we're providing a product and service which we charge for, but we're trying to help people invest in a way which is aligned with their principles and their beliefs. We have all of the infrastructure to do that. We've built it over time. We think the funds are well managed and are overseen by a very credible Sharia board. Just because HSBC itself isn't an Islamic bank in its entirety doesn't mean that it shouldn't be able to provide Islamic banking products and services and Islamic funds to end clients. So I don't see that as being a sticking point for financial institutions that have the genuine intent to create products and services which are there to fill a gap in the market and help people invest in a way which will be beneficial for them over the long term. It shouldn't be a sticking point whether these are created by a wholly Islamic financial institution or an Islamic financial institution which has the infrastructure and is willing.
Yeah,
fair.
It'd be difficult. Have you seen any appetite from non-Muslims investing into these products?
It's an interesting one because the answer is yes, absolutely. So the flagship fund, which I keep going back to, our Global Islamic Equity Index Fund, we noticed actually a few years back that when speaking to different clients that there were a lot of non-Muslim investors in that fund. So we started doing some investigative work, and unsurprisingly, a big part of that was to do with the good performance, the strong performance of the fund. But also, we noticed that some clients didn't even notice it was an Islamic fund. Yeah. They saw the performance. They didn't see it. It didn't register. They saw the performance and thought this is great. And they then saw the ethical piece, the exclusions are no alcohol, no tobacco, no gambling, no adult entertainment. And I thought, yeah, that kind of fits with my principles. So they went for it. So that was really interesting. So we still today have a large number of investors across the suite, which are non-Muslims, that like the performance of the funds and happy to have those exclusions because they resonate with them.
Yeah, to be honest, I actually have a lot of non-Muslim colleagues that have invested in that in their pension. They put money in what?
Is it the Nest one? And I was looking at the different funds that Nest have, or the different portfolios that Nest have. And historically speaking, they like to mix different asset classes to make a diversified portfolio. But historically speaking, at least, they didn't create a diversified Sharia compliant portfolio because there was only equities.
Yeah.
But they have since added Sukuk to it. And that will probably decrease its performance in the future, which is probably not what people want, but at least it will smooth out the returns along the journey.
Yeah, depends on the performance of equity markets, right?
Yeah.
So, you never know.
Yeah, that's true. You never know. Yeah. We've had a good few years, but you never know.
Could all be downhill from here.
Yeah, until retirement. Oh dear.
But on that matter with the Sukuk fund, so obviously with the multi-asset, because you've got the equity funds, you've got the Sukuk fund, the REIT. We'll come on to the REIT in a minute because I think you're the only REIT provider, a Sharia compliant REIT provider available.
Right.
In the UK.
In the UK, yeah. I haven't seen any others. With the Sukuk fund, would you say that there is any point in having a Sukuk fund if it's not currency hedged?
It's a good question. It's a very good question. So the Sukuk fund we have, the underlying benchmark is comprised of dollar-denominated Sukuk paper. So the fund invests in that dollar-denominated Sukuk paper. So as long as you're aware of the currency risk that you're taking on, if you're a sterling-based investor and you're investing in a fund whose base currency is dollars, of course you have that exchange rate risk, which you have to be aware of. But as long as you factor that in to your investment process and investment thinking, and you're focused on what the asset class, investing in the asset class can deliver for you, whilst factoring in that exchange rate risk, and it still makes sense for you to invest in that asset class, then...
Because this year in particular, the dollar's got smashed. And we're really feeling the effect of the Sukuk fund not being, as steady as you might expect it to be.
True, absolutely. But to be honest with you, I mean, dollar versus sterling, that's one of the more stable exchange rate pairs.
Would you guys ever consider having a hedge to get rid of this FX, risk?
It's something we're actually looking at this point in time.
Okay.
Without making any promises, it's
so 2026.
I say no more.
An ETF version. Perfect. Thanks.
So, what are the future plans for HSBC, the whole Islamic part? Because maybe if you could touch on the historical part, and maybe you don't know this answer, but my parents, I saw they had the bank statement the other day. I think it was for their mortgage or whatever, and it said HSBC Amana on it. I go, you remember those days when HSBC had an Islamic arm in the UK, and then that was no more, and then these funds came out. So.
Yeah, I've got to confess, I don't know the exact detail of that. So that, as in the ins and outs of it, what I can say is that we're fully committed with the suite that we've brought to market and the products that we intend to continue bringing to market over time within the Islamic investment space. We're fully committed to it. We're constantly speaking to investors in different jurisdictions of different kinds, whether it's retail investors or larger asset owner types, pension, insurance, sovereign, and other entities. So we're constantly getting feedback on the product set we have. And we're trying to think about the right way to build the franchise out to make it as relevant to as many of our clients as possible. So we do have other fund concepts in the pipe that we intend to bring to market over time if we can. But also we're looking at doing more on the service side as well. So you mentioned Nest. We've worked with Nest and we've worked with some other pension providers in the UK to help that in terms of provision of products to help them bring to market wholly Sharia compliant pension products pension strategies of various kinds. We're working with clients in different jurisdictions, building Sharia compliant glide paths and other such pension constructs for those entities. So we're looking to do more than just be a product provider. We're looking to do more to help people invest, clients of various kinds to invest in a Sharia compliant manner and to offer Sharia compliant solutions to their and wholly Sharia compliant solutions to their end investors.
Who will be in charge of kind of making the decision? You're the head of the department, right? You can just come up with a few more. If we give you a shopping list of what people have told us they want.
Well, I'm responsible for the investment specialist team, but I mean it's a collective decision-making process. The whole passive business within HSBC is there's many different departments to it, and we have committees of various kinds, and we need to get everyone's buy-in before bringing products to market.
Because you did all the regional funds, so now we've got that sorted. What about like industry-specific funds? Like obviously people would love an AI fund.
We've had lots of interesting conversations with clients around Sharia compliant thematic products generally. In particular, tech thematic products of various kinds is top of mind for many investors. So never say never.
Yeah. So I'm guessing you were there when HSBC first created these new ETFs.
Yes.
You were instrumental in the whole creation of them or making of them or putting them out there. How have they performed compared to how you thought they would do? Not in terms of performance, but in terms of the size of the funds now.
Yeah. Exactly as expected, to be honest with you, because what we've found with Sharia compliant funds is there's a bit of a hockey stick type process when it comes to the AUM growth within these funds. The reason for that is because of all of the additional layers of due diligence which clients need to do on these, and layer on top of that the requirement for many to have a minimum track record of X number of years, a minimum AUM size of however much before they can invest in it. We knew it would take time for these funds to start to grow meaningfully. So they've been the AUM trajectory has been following that expected path, to be honest with you. So we're quite pleased with the uptake of these funds, generally speaking. Where it's kind of evolved in the way we expected it to. We have a very large pipeline. As I say, we're working with a number of different clients in different jurisdictions, so we expect them to continue to grow quite meaningfully over time.
What do you know the proportion of retail versus institutional investors?
I don't have that to hand, and it differs from fund to fund as well. Yeah. It differs.
I can imagine obviously the Titans is in everyone's pension, so that would be hugely institutional.
Yeah, exactly.
In the early stages of these funds, when the AUM is so low, does it impact liquidity at all?
It can do if you're below a minimum threshold when it comes to managing one of these funds. So remember, with a passive fund, the objective of the fund is to track a benchmark, and how a fund is judged in that respect is across two criteria: tracking difference, which is the total return difference between your fund and the underlying benchmark. So you look at the total return of the fund over some horizon, a year, say, versus the total return of the underlying benchmark, and the difference between the two is your tracking difference. And then there's the second criteria is your tracking error. So the variability of that tracking difference. If you're tracking well for some amount of time, but tracking poorly for some amount of time, and your tracking difference is constantly chopping and changing, your tracking error will be high, which means that perhaps there isn't any consistency in your ability to track the underlying benchmark. So every fund, depending on the nature of the underlying benchmark, which stocks, for example, or bonds comprise it, how liquid they are, there'll be a minimum amount of AUM you need to be able to track that fund effectively. So you'll need a minimum, because you want to, depending on whether you fully physically replicate, i.e. own every single security within the benchmark, or whether you optimize, i.e. i.e. only own a proportion of those securities, irrespective of whichever tracking methodology you use, there'll be a minimum AUM amount that you need to effectively track that benchmark, with minimal tracking difference and minimal tracking error. So it depends from fund to fund, depending on the nature of the underlying securities within the benchmark, what that minimum amount of AUM is, to ensure that you track well and the fund performs well in a relative sense, relative to its underlying benchmark.
Thank you, Sefian. I mean, we're coming close to the end. So one thing I wanted to look at is, obviously Muslims have been around for a long time, hundreds and hundreds of years, but Islamic funds haven't, apart from your one, which is a couple of decades old. It's a couple of decades old. What happened a couple of years ago for HSBC to suddenly start thinking, oh, let's get more involved in this market? Do you think Muslims are more switched on with regards to Sharia compliant investing?
Good question. So I think awareness is definitely growing. There's no question about it. And I think awareness grows as more investment options appear within the marketplace as well. So it's kind of a self-reinforcing cycle to some degree. For us, it was really a case of the passive business within HSBC has only really grown meaningfully, or has grown quite meaningfully over the past, call it 3 to 5 years, in terms of asset growth, generally speaking. So we've really built out the passive business over that time. And a big part of our desire when building the business out was to do as much as we possibly could within what we call the ethical investment space. And within the ethical investment space, we have two components to it. We have responsible investment products of various kinds, so sustainable investment funds, so ESG type investing, as it used to be called. And we have faith-based investment products, which is where the Islamic range sits. So we wanted to do as much in that space as possible. So it was natural for us, given we had this flagship fund, as we were growing the business, to think about what more we could do. And the more we investigated the space, the more we realized we could do, because there are just such huge gaps in terms of the availability of products generally. And, it was almost unanimous when we spoke to investors in different jurisdictions. They almost all of them told us, look, we need much, much more in the Sharia compliant investment space in terms of product options of various kinds. So it was a no-brainer for us, really.
Yeah, it makes sense, I think that's.
No, it's okay. Go ahead.
I think that's quite a nice place to end it.
Yeah, I mean, I have so many more questions, but for another time.
Yeah, we can go for hours. Yeah. I mean, overall, I've always quite liked the HSBC funds because of their low fees, the fact that they already do purification, the fact that they're accumulation funds, it makes it quite straightforward. But some things that some investors would disagree with, but there's plenty of room for improvement, as you'd say, and there's plenty of scope for that industry to keep growing.
Yeah, I'd say at least they're doing something. If it's perfect, maybe not, but it's something.
But that's when Muslims can choose. They can choose with their money, can't they?
Yeah.
Exactly.
And they have voting power. The Muslim pound.
The Muslim pound.
Yeah, thank you so much for your time.
Pleasure.
Yes,
yeah.
Sefian, thank you so much. I appreciate that.